At the height of the COVID-19 crisis, the government looked to the bond market to help raise the money that was needed to fund social support programs. Now that recovery is on the horizon globally, the focus is shifting from riskier emerging markets, and our bond market has been shaken.
I think we've seen quite a large sell-off over the last couple of weeks. Bond yields, the 10-year yield bottomed at 8.7%, and now it's 9.45. So that's quite a big move in 10-year borrowing rates for the government. And I think the vast majority of it is being driven by the global sell-off in interest rates. It started with the US Treasury market, so that's the background. But it's compounded by the fact that South Africa has a fragile fiscal situation. And thank goodness we produced a fairly good budget a few weeks ago. Otherwise, I think the impact would have been far worse.
In addition to the budget speech boosting confidence, the latest data from Stats South Africa shows that GDP is rebounding. Higher growth should see more revenue coming into the country, and this is much needed.
What we've seen in terms of that extra allocation, the government's been borrowing 11.5 billion rands a week out of the local South African rand bond market. And that's been primarily funded by a combination of South African banks and South African fund managers. And I think going forward, the ability of Treasury to borrow at the same rate is not there. We've seen problems with the auctions. Yesterday was a relatively weak auction. And therefore, what we really badly need to see is this weekly issuance rate decreasing.
Selling the bonds to local and international investors is one of the ways government can make up for its budget shortfall, which is expected to be at a record-setting 14% of GDP this year. For Newzroom Afrika on Channel 405, I am Kopano Gumbi in Johannesburg.